Imagine a long winding line of people. It stretches around the block, down the street, and disappears over the horizon. You are standing in this line. You don't really know what is at the front, but you know that everyone else is waiting, so it must be important. Every few minutes, the line shuffles forward. You feel a sense of progress. You feel like you are doing the right thing. But what you don't see is the back door. While you stand in the cold, waiting for your turn, a small group of people is walking through a side entrance. They aren't waiting. They aren't asking for permission. They walk in, they eat the food, they drink the wine, and they secure the best seats in the house. By the time the front door finally opens and you are allowed inside, the party is mostly over. The food is cold, the best seats are taken. And to make matters worse, you are handed the bill for the entire evening. This is the hidden structure of every financial market. It is a mechanism that ruthlessly transfers wealth from the patient majority to the risk-taking minority. It is the tax you pay for requiring certainty. Let's look at how this mechanism works in the wild. Imagine a new idea forms. Maybe it's a piece of land in a swamp that nobody wants. Maybe it's a strange new internet currency that sounds like a joke. Maybe it's a company selling books out of a garage. At this stage, the price of entry is very low. You can buy the swampland for pennies. But the social cost is very high. If you buy it, people will laugh at you. They will tell you it's risky. They will tell you that you are throwing your money away. You are alone. This is the early phase. The door is wide open, but it looks like a dark, scary cave. A few people walk in. These are the contrarians. They are comfortable being wrong. They buy the land. They drain the swamp. They build a foundation. Time passes. The swamp starts to look like a construction site. A few roads appear. Now the smart money arrives. These are the investors who see the potential. They aren't taking as much risk as the first group, so they pay a higher price. They don't get the land for pennies. They pay dollars. But they are still early enough to make a fortune. Then the news crews arrive. The newspapers write headlines. Swamp City is the next big thing. This is the signal for the crowd. This is you standing in that line. You read the article. You talk to your friends. You wait for your parents to approve. You wait until the neighborhood has paved roads, street lights, and a Starbucks on the corner. You wait until it feels safe. And because you waited for safety, you are punished. You walk into the sales office, and the price of the land is now 100 times what the first guy paid. You take out a massive mortgage. You sign your life away for 30 years to buy a small slice of what the early movers got for almost nothing. You didn't pay for the land. You paid for the certainty. The market charges a massive premium for the feeling of safety. If you wait until an investment is obvious, it is by definition no longer a good investment. The profit has already been extracted by the people who arrived before it was obvious. This dynamic creates a cycle that repeats over and over again. It's a game of musical chairs. The music starts. The asset, whether it's tech stocks in the 90s, housing in the 2000s, or crypto in the 2020s, starts to rise. The early holders sit down. They are comfortable. As the price climbs, the media creates hype. The hype draws in the crowd. The crowd brings fresh money. This fresh money is used to pay out the early investors. When you buy a stock at an all-time high, you are essentially handing cash to the person who bought it 5 years ago. You are providing them with their exit liquidity. They are leaving the party through the back door with bags of cash, just as you are walking in the front door with your wallet open. The cruelest part of this system is that it exploits human psychology. We are herd animals. We feel safe in groups. If 5 of your friends buy something, you feel a biological urge to buy it too. You feel that if everyone is doing it, it can't be wrong. But in finance, if everyone is doing it, the opportunity is gone. The crowd is always late. The crowd is always the bag holder. So how do you escape this? How do you stop being the person paying for the party? You have to change your relationship with discomfort. Most people scan the horizon looking for what is popular. They look for the long line and they join it. You have to learn to scan the horizon for what is ignored. You have to look for the empty room. You have to be willing to look stupid. The person who bought Amazon in 1998 looked stupid. The person who bought Bitcoin in 2011 looked crazy. The person who bought real estate in 2009 looked reckless. But they were just early. They walked through the door when it was dark. They didn't wait for the lights to come on. Now, this doesn't mean you should gamble on every random idea. Most swamps are just swamps. Most dark caves are just empty holes. Being early is risky. You might lose. But being late is a guarantee of mediocrity. Being late guarantees that you will work hard, save your money, and hand it over to someone who saw the future before you did. You are standing in the line right now. You are looking at a chart, or a house, or a business idea, and you are wondering if it's a safe bet. You are waiting for one more confirmation. You are waiting for one more sign that it's okay to move. But you have to ask yourself, if the light is green, and the road is paved, and everyone else is already driving on it, are you driving towards an opportunity, or are you just driving into traffic?